right. Well, let's just get Hartmut Issel in. He's head of equity and credit APAC and chief investment officer at UBS Wealth Management. Let's ask him. Hartmut, great to have you with us here. Thank you very much for your time. Appreciate it. So just a quick word on the sort of dominating driver for markets from here, Hartmut. I mean, the one big macro driver indicator which emerging markets watch, of course, is the... Okay, I think we lost the line, I'm being told, and Hartmut can't hear me. So we'll try and reconnect that line once again. Let's just look at the SGX, the GIF Nifty, beg your pardon, and also, okay, I think Hartmut is back, I'm being told. Hartmut, so the 10-year is being watched closely here, and of course the dollar index as well, because it's all about flows. But even within EMs, at the margin, at UBS Wealth, are you noticing a fair bit of shift away from markets, high-performing markets over the last couple of years like India into a very low-performing market like China? Is that shift happening? Is that real?
To some extent, I would say, at least in the short term, you'll see we have some of that effect, right? Because as you rightly point out, right, India has been doing very, very well, and we think it will also do so again. Probably, I would estimate in the June quarter when the earnings growth probably comes up a little bit. I can also explain why. But yeah, if you compare it with China, right, we had a couple of years almost for a while, like 2-3 years, where it didn't do so well, and now you have the internets, which are really, if you compare the valuation to U.S. stocks, for example, right, it really that was almost 60% or really, really high, right? So that's starting to come in again. And therefore, as a result of that, you also see to some extent, at least temporarily, some shifting happening.
Hartmut, good morning. To press on that point, the Hang Seng rallying 17% already so far in 2025. Is this just a tactical trade? People are getting excited after DeepSeek. And of course, Alibaba's numbers have been really good as well. Is this just a tactical move? Or is there really something serious shifting at the margin? Maybe in some of these tech names, a real valuation advantage, growth coming back. What's happening?
Yeah, I would say DeepSeek is maybe one point, but it's certainly not the only one. We have observed last year, if we go to China, for example, right, that also it seems the regulation, etc., what the government did, right, for almost 3 years in a row, that has come a bit to an end. But the companies also changed a bit their investments. They became more disciplined. I would say less competitive between each other, and then the valuations. I mean, in some cases, were even below 10 times. I mean, if you then see what we saw last year, the margins going up in China for the internet, for example, and this year the revenues also popping up a little bit more. Yeah, then it's not so surprising if for a while you see a bit of a change there.
Well, Hartmut, hi, good morning, good to see you. When I recall the last time we chatted, right, you were talking about maybe we're penciling in too high earnings growth here in the Indian markets. That seems to have corrected itself, and that's where we've pulled back a little bit for the Indian equity markets. Now, post this decline, and the expectation is that earnings will improve now from here on after, a few cuts that we've seen the last couple of quarters. Now, what's the positioning on the Indian markets? Do you think we've come to those levels, which is a little lower than the long-term averages? Do you think it's a good time to get into India? What kind of returns should we be expecting from the Indian markets? And the toss-up between India and China, putting everything that you said on board, going by the economic data as well, what would your preference be?
Yeah. I mean, I hope that the China internet and India are not necessarily always exclusive, right? So they could both do well. But let me illustrate my point on the Indian market. Right? My expectation for the earnings growth, at least for the fiscal 25, so we have another bit more than a month, has never been that bullish, right? And the reason, if I go back to 24 and see how high the Nifty EPS growth was back then, and also why it was that high, right? Okay, you can argue maybe a bit of COVID GDP and therefore revenues, but there was an unexpected margin improvement that was always clear that couldn't last for the same for the same magnitude for this. However, now we're looking more and more. I'm certainly looking more and more in the fiscal 26, right? So fiscal 26, now we had an earnings growth that was below the long-term average that at least I have for the Nifty. I have about 11%, so we're below that, right? And we're seeing companies in sectors like consumer, like cement, like autos, right, oil and gas, even growing close to zero. This shouldn't last for a second year, I believe, in India and in the main sector. So you will see this going up. My estimate for Nifty total is very close to 15%. So even if we do assume perhaps the valuation stays where it is, I think it could or should actually come up, could come up again a little bit. But even if it doesn't happen, right, 15% can give you an index upside that over 12 months or so looks, in my view, pretty attractive.
More than double-digit returns on the Indian markets over the next 12 months is, what we could potentially be looking forward to. Is that correct?
Yes, the earnings, in my view, right, because you had such a low base, and this is important, right? So in fiscal 25, we had a very, very high base, 25%. Very, very difficult for any company to beat this in a large margin. When you had on average, I think it was a 7% growth is what I have for Nifty for this year. If you have that, it's much easier to bring up your EPS growth number again, and I think that is very likely to happen, probably starting around the June quarter onwards.
So, Hartmut, you're saying 15% earnings growth in India. And how much in FY26 in China? How much would it be all put together? And X of the tech, how much would it be? Just to get a sense of the China revival earnings?
Yeah, on the earnings side in China, it would be lower, maybe 6, maybe 7%. Also, and that's 26. By the way, I mean they have a calendar year, right? So for 25, we have about 7.5%. So it's actually less, but of course it came from a much lower valuation in China. To be fair, also rather than it came in India. So, but be that as it may, right? If I really focus here on India, and this is something also when I speak to friends and other companies, etc. Everybody talks about the downdrift in earnings, and I say, where is that coming from? Oh yeah, the December quarter, maybe the quarter before. So it all comes from the fiscal 25. Very few of the observers are actually willing to bring this up when the base is so low for Indian companies to actually go up. And in my view, we're going to go up even above the long-term average. As I mentioned, I have usually 11.5%. We could actually, it's normal, right? It happens all the time. I wouldn't be too surprised if we actually go above that at least for 12 months.
All right. Thank you very much, Hartmut. Appreciate you joining in, and it's good to get that perspective.